Can anybody put their finger on why they trade the way they do? Think more like outside the box when it comes to like indicators, not time zones. No, not time zones. Think outside the box. Whenever we're talking about indicators, for example, the way they work, the way they do is because so many people are using that same indicator. In terms of the obvious stock makes the biggest move because it has the largest number of eyes or buyers on it. And so, just like Denver said, with Chinese stocks, people know that it's a Chinese stock. And there's just this negative connotation when it comes to Chinese stocks. So when somebody mentions a Chinese stock, they just know it's a scam, 9 times out of 10. 9 times out of 10, even with an Alibaba, nobody wants to really hold Alibaba. And obviously that's not a Chinese penny stock, but the same thing goes. There's just this negative connotation when it comes to Chinese stocks. So with that, they tend to be a lot more, I wouldn't say pumpy and dumpy. Now, obviously they are. I think the better word, though, is poppy and droppy. I think the better word is poppy and droppy. The reason why is people are so insecure. They lack so much conviction that whenever they do see hesitation, they're panicking out of it. So you get those nasty rug pulls, and then, of course, it goes both ways. People are just very panicky, very anxious, very nervous trading it, and that shows in price action. Right? So all those big wicks you see off the highs, all that craziness, that is a byproduct of this insecurity, this anxiety that comes with trading a Chinese stock. Hence why I trade just small size whenever we have this Chinese theme. I'm never going to go take a full size entry on a Chinese stock. It'd be irresponsible. And that's why it's important to understand what you're trading. You've got to know what you're messing with. Is it simply Chinese only? I mean, you're looking at Hong Kong, China, Malaysia. You can treat all the Asian names as such. If it's Japan, I don't really treat it the same, but yeah, all the Hong Kongs, the Chinas, yes. Yep. No, good question though. It's a good question. Yeah, you got to be careful with those. Got to be careful with those, but you got to know what you're messing with. You got to know what you're messing with. But I try to make sure to mention it if it's something to note. Now, obviously, if it's a country that doesn't really matter, then obviously I typically won't say it. But if it's a China, if it's an Israel name, those are typically some that will trade interesting too, to say the least. So the Israel names, the Chinese names, it's good to be aware. Definitely good to be aware. All right, so that's that. Again, don't beat yourself up, though. It's been tough the last 2 days. Big moves, but again, if it's not predictable, yeah, it is what it is. Let's see. Canada's okay. Canadians might be a little bit crazy, but hey, the stocks are okay. All right, let's see what we got in homework. And then we'll dive into the lesson. Of course, the homework was to do some watch list again. Let's go back here. When was the last date we were here together? I get the date so mixed up, the 12th. All right, let's go back and take a look. Let me open up this doc here. Now, Bobby, if I get me a virus here, I'm just kidding. All right, let's see what we got. HBK, break above area of supply of 625. I like this, but what's the float? Do you know what the float is? And I see something is down 50%. That is scaring me. That is scaring me, but I'm going to act like I didn't see that. I'm going to close one eye. What's the float on this, on HPK? Okay, so float is fine. I don't mind it. The only thing is volume. Volume is not quite there. It's not really tradable in that sense. The setup itself is good. You just have some issues with fills because of volume. Setup's not bad, though. Setup is not bad. 40 million float. Did you type in the float and I missed it? No, you didn't. Okay, I was making sure I wasn't going crazy. Let's see. 1 minute chart with time and sales to show the spike at 1801 was an anomaly with no volume. Okay. Stock has to find volume if it breaks over 1475. Range for pullbacks, confirmation of 1435 or a breakout. So I don't like this. And I'm going to show you why. and I'm going to try to show you on your screen here because it might be easier to see than if I was to pull it up on mine. Let's make this a little bit bigger. So the problem you've got here is if you look for the break of 1475, you're essentially buying up into this sell-off here, which I assume was at earnings. What was the sell-off here? I see it happen right after market close. What was the, let me see. Not that it so much matters, I'm just curious. No, I don't see that. There's also not much. Is this the right stock? PAL? PAR. Oh, I'm looking at the wrong stock. I was like, hold on a second. CEO to step down. That's Adobe. Offering those. Okay, so stock down and offering. So check this out. Let me show you. The one thing to be wary of whenever you're looking at something like this, and we know that it sold off here from the close here at 1585. The big thing that we all have to keep in the back of our mind, we want to be trading stocks that are strong, right? We want to be trading stocks that are strong. We want to be trading with buyers. Otherwise, you've got to ask yourself, is this an obvious setup? You know, and that's for you to decide, not so much me, because it's a bit of, there's some subjectivity to it all. Obviously, there's some that's objective, but for the most part, there's some subjectivity here. And I want you to ask yourself, if you looked at this setup and you put a room of people, let's just say you have a room of 100 people, and you put this chart in front of every single one of them, would they all look at that and say, yeah, this is a clear watch? If the answer is no, that's all you've got to know, right? We just want to make sure that, again, whatever you're watching is obvious to a large group of folks, you know, the majority. If not, right, then you want to leave it alone. What do you have here? Watching it over 270 for pullbacks or breakout opportunities. I don't mind this. This is good, and I understand what you're watching for here as well. So, again, like, objectively, that's correct. It's good. POYX identified supply well. This is good. Nothing wrong with this. Yeah, this is all good. The only thing is, again, these are good. The only thing is with this up here, make sure that you're looking at the obvious stocks. This here, too, just double check the volume as well. HPK volume was a little bit light. A little bit light. CLIK, again, noted your levels well. Range is good. POYX as well. Good job. Yeah, good job. SVCO, also fantastic. And I love this. You marked up this area of liquidity so well. 533, good. Beautiful, beautiful, beautiful. I'm looking at the daily again. We have to make sure we're working on the daily, y'all. Over 280, pullback to 242. Hold on. Over 280, pull back to 240. Okay, so I don't like this. I do not like this. If you're looking at over 280 for pullbacks over 240, I would almost ask, so here's the thing. If you want to see a break over 280, where we know we found sellers here previously, and of course we have resistance here sitting on the daily as well, what about this would make you say that you'd want this? If it broke 280, why off of 240? Right? Why off of 240 on the break of 280? But the levels here, I don't see 240 marks. So I'm just trying to see what you're looking at here. Maybe you're looking for the break of 310? I'm not sure. I'm not sure, but let me know in the chat, and I'll look at here in a second. But I'm not following on the 240. That's the only thing here is if you say you have to get buyers back over 280, as to where that 240 is coming from, just let me know, and I'll take a look in just a second here. AIF, pullback on break of 280, range of 295. This is the same stock, yeah. When was this? The 15th, got it. Strong runner, pullback and break 280, range to 295, 310, 36. No, I don't like this. Pull back and break 280. If you broke 280, do you have any range? Again, look at this. If you were to break 280, do we have any range back up into these highs? Proportional to the size of the move? Right, so again, I want you to look at this. And again, this is how right? I really want y'all to listen and take notes on this because we're not going to be going over watch list as in depth again in the future. So what I want you to focus on, I'm going to say this, and I really want you to take notes and follow along here. Everybody, not just him, but everybody. When I look at this setup, and I'm looking for a breakout, and I say, all right, I want to take a break of 280. All right, well, here's the thing. Ask yourself, if you, right, put yourself into the shoes of everybody else out there. If you were looking at this over 280, this thing breaks 280, you're looking for a pullback, would you say that 295 gives you enough incentive? Do you have proper risk to reward on the break of 280? I would say that that risk to reward is fairly slim at that point, right? Especially with this major selling pressure we have off the highs, we'd have to assume we're buying up into those sellers again, as it already sold off from those highs once. You know, it's not very confidence inspiring for somebody to go try and take a breakout back up into those previous highs. So I'm not a huge fan of that myself. Again, something to ask yourself. Again, that can be subjective, but you just have to ask yourself, if I was taking this breakout and the candle was currently right here, would I see amazing risk to reward that makes this an A+ opportunity? CLIK I like, and this is a good setup here. You're saying break above 460. I don't like 460. I do like the break of 5, though. The reason why, I'll show you here. The break of 5 right now, we do have price consolidating sideways beneath this 460 and 5, or between, I should say. The break of 5 would be key, right? Otherwise, you're just trading with indecision. We don't really know where this wants to go yet. So we have this flat top formed off the high. Let's just look for a crack above. We can play it from there. Like, we want to trade with that direction. We don't want to try and guess the direction. We just want to know the direction. But again, that's the one thing that I want a lot of you to just practice a whole lot more is if you're looking for a breakout or just anything in general, if this was happening right now, would you look at it as somebody else, you know, from the outside in and say, yes, this has enough range to make this a worthwhile setup? The incentive is there. Right? Is the incentive there? And if the answer is no, leave it be. Leave it be. It's not an A+ setup. You're going to go force it. You're going to get faked out. It's not going to be a happy time. Right? It's just not going to be a happy time. BIAF, look for a break of VWAP trend over 2 for the range back to highs. This is good. Only thing is, again, I'd be aware of this range here, the low out of this range. Other than that, I don't think this is a bad watch. I would just definitely be aware of what you're fighting with here off of 220, where you have this past area of support, which of course now would become an area of resistance. You're saying lots of supply, 250 to 275. Don't forget too that this was an area of demand. I'll show you here. This being an area of past demand, again, let's also make a note here that this being demand previously makes this supply now. So not only do you have, yes, you have sellers sitting through here, but you've also got sellers sitting through here. Okay, well here, now I read your next message. You don't really like it. I gotcha. SVCO game plan is good. Break over 530. Zone is marked up well. PLYX, same story, looks good. Over 739, good job. LGVN, 117, good job. You're saying maybe too tight range. In this case, the range is not too tight. If you look at this here, we were to play this over 117, I think we can safely say, with this nice coiled setup here, if we were to break out and I was to look for pullbacks in this range off of, say, 115, we have plenty of room. We've got like 20 cents of range. You know, so proportional to the move, this is fine. That is fine. Now, of course, I wouldn't play it over 138. Now, of course, up in this area here, of course, range would be a bit slim. AIFF, over 310, range to 377. Entry will be here. Yeah, I like this. Like I said, you couldn't really play it lower. You couldn't really play it lower, but I don't mind it up through here. The only concern would be these highs on the daily overhead, where if you try to take a breakout, you know, we could assume that it might fake you out. Still a good setup, though, nonetheless. Something to be aware of. LGVN, break above 117. Good. Good. Range to 180. Good. Yeah, all good. CLIK. Break of 5. Range to 820. I like, but I would not forget some of these past levels, 575, 7, 8. Setup is good. This here I don't like so much on ACXP because here we'll take a look at this. You're saying to watch for the break of 4 and hold 4, must break above the okay. So this is backside, right? And we'll take a look at this. Let me pull this up on the charts here. On ACXP. And again, we don't want to be fighting trend, so take a look and I'll show you what I'm referring to. So we have this big, let me clear off my charts. You know, whereas you're watching it, I believe down here, yeah? Let me look back and see where you're looking at this. I'm surprised it actually made it move back to 540. That's wild. That's wild. I suppose it worked out, but the reason that it sort of puts me off on this myself is we've got this big grab of liquidity off of 687, which I just don't like. So, hey, maybe you like it, maybe you don't. Personally, this is not something that I would look to trade long term. I don't really like it myself. Now, if it wasn't for this nasty high, I think I would like it, but for me, it throws me off a little bit. Your levels are good. Just not a big fan of that big wick, but if you like it, you like it. Let's see here. Also fine. Tightening wedge. Over 200 May, but since it has some consolidation in this area since Tuesday, I think it's safe to play if it continues. So there's nothing wrong. I know you've mentioned it's over the 200 May. There's nothing wrong with it being over the 200. That's actually a positive thing. Yeah, it's actually a positive thing, so don't worry about that. If it continues through 110, range to 115, that range is a little bit tight. If you're looking for 115, that range is a little bit tight. I don't know that I would take a break of 110. Again, like I said earlier as well. Again, ask yourself, if you were to look at this from an outside perspective, this thing is up here at 112, 113, you know, in the break of that 110 area. Do we really have incentive if we only have range to 115? Again, you've got to ask yourself these questions because it's not so much, this is not a game of what looks good to you, it's what looks good to everybody else. That's why whenever I look at stuff, I try to be as objective as possible in viewing it from a crowd perspective, because what really matters most is what the majority are going to see and think when they pull up a setup. What I think about something, what you think about something, this is why we don't try and time the market, because what we think might happen, what you think might happen, it could be the most logical answer, but we can't predict the market, so we have to sit back and wait and see what the majority are going to think is going to happen. And what they think is going to happen is what does happen, right? So we have to wait until that happens and react based on that, not based on what we think is going to happen. So if I look at a setup you're looking for a breakout on like this in LGVN, and I'm looking at the break of 110, I can tell myself that the majority are not going to see this and see much range, right? And so what's going to happen is a majority are going to be taking profits there rather than going to rush in to buy. CLIK, little barcodey, low volume move up in after hours. Yeah, I like the setup though. It's good. TWAV, we do not like. This thing has given back everything we can see here. Made a move here from the open, 120s, all the way to 218. Gave it all back. Again, if you recall from past classes, stock has to maintain half of its move. In this case, it gave back everything. Right, it gave back everything. And so if it was to break back over 140, 150, why? Again, here's the question to ask yourself. Again, like I said, crowd perspective. What you think might happen, the crowd does not think is going to happen. That was made apparent right here. Right, so if you're trying to play it back up into those highs, everybody else out there looks at the chart and says, wow, this thing rocketed and gave back everything off of 218. So everybody's going to be scared to buy all through here because they see this nasty rug pull, pump and dump. So again, ask yourself, what are the majority going to think? This is fine, but what are the majority going to think in the setups you're looking at? Also good. Good setup. I doubt that it's going to meet criteria just because it did reject heavily off of 3, but if it does, it's a good setup. Levels are good. Levels are good. And levels are also good. Good job. Good. A lot of you marked this one up the same way, which is good. Good as well. Yeah, good job. Good job. These are a lot better though, guys. I'd want to see a breakout on this. You have to. There's not multiple ways to watch this. I agree that you have to watch it over the highs. I don't like the pullbacks. Reason being, right now you can see we have, of course, higher low structure here. And of course, we also have this big old topping tail rejection, which of course means the only way to watch this would be over those highs, right? We have to maintain market structure, which right now we are holding those higher lows. So unless this does break over the highs, there's no real way to watch this. So would have to get over those highs, which I believe your levels were good otherwise. Yeah, your levels are all spot on. It's just more so of how you have to watch it. I have to ask about the 50% too. I'm going to have to make sure we look at this. Make sure we look at this. Learn the mistake, move on from it. Use that capital in the good setups. BIAF. What is the game plan here? Watch for break of supply, top 275, and pullbacks into the area of demand for entry. This is good. That's fine. That works. CXAI, break above 45 cents, pullback for entry range to 52. I would agree with what you said here, as you said that you doubt it's going to make a 15-cent move. I agree, and the thing is that even if it did, it's a 30-cent stock you're expecting 15 cents out of before it even meets criteria. So, you need this to gap up 50% before it even nears your criteria. So I would agree. Your levels are good, but I definitely agree with what you're saying. NBY, break above supply 182 for the range to 210, 28. Again, levels are good. Not a huge fan, though, of that rejection off of 180. How is volume on this? No. No, no, no. So again, pull up these charts, guys. Pull up these charts and you'll get a much better idea of what you're looking at here. There's no way to play this either on NBY, which typically NBY is a bit of a turd as well. It's a bit tough to trade. Usually pretty barcodey. So we've got some stuff to talk about again with some of these, and I'm going to give y'all a checklist going into the next session, and of course we'll dive into the rest of our lesson tonight after this. But there's a lot of stuff that I want to make sure we talk about. This is all good, by the way. Good. I like that you mentioned the video news. Good. Yeah, good. Okay. Cool. Good. Break 94. I don't like 94 break. I don't like 94 break. You're buying straight up into the previous high. Again, that's just a question of asking yourself what the majority would be doing. 325 break is good. Ayers is good. 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 When did this posted? This is today. Okay. What's your game plan? Break 98. I wouldn't play this off of 7. I know you're saying break above 7. I'd be cautious. I would be cautious. This huge tail off the high, I'm a little bit wary of, but again, just something to be cautious of. I agree. Break above past high on EDSA, only real way to watch. Do not like this. Break over 305. Be buying straight up into the topping tails from this morning in pre-market. This also gave back its entire move today as well. Daily range is decent. You get over 305, you have room to 330s, but my bigger concern is that pre-market rejection. Same story here. Again, look here. You're saying break above 60 cents, watch for support, but then you have the 50 MA right here. And of course, topping tail rejection from this morning as well. So let's talk about a lot of this. I've got a lot to talk about with a lot of these. Do we know what do you think my biggest thing is from this for y'all to take home? Here's the thing. There's a lot of, all the levels are good. What's missing though are the details. Stocks not having any volume. Stocks being backside, they've given back their entire move. It's the little details that we're missing. So let's do a checklist here. Hold on. Let's do a checklist. Let's get a checklist, and I'm going to give y'all a checklist to go through with these watch lists because I don't want y'all to make some of these watch lists. You go in the next day and try to trade a breakout and you get faked out. Number one, on breakouts, or I guess we could say any setup, does my plan truly look good? Is there really enough range? Would everyone else agree? If the answer to any of those questions is no, off the bat, take it off your list. Does my plan truly look good? Is there really enough range? And would everyone else agree? If you can't look at a setup and everybody look at the same setup and say, wow, this looks incredible, there's so much range, perfect setup, it's probably not obvious enough. You don't want to go take a breakout that only looks good to you and nobody else, because who's going to be there to buy that breakout? Who's going to be there to provide that fuel to the flame to get you that move higher? Number two issue that we're seeing is there any volume? Is anyone home? If you look at price action, is it readable? If not, leave it alone. Don't even put it on your list. Don't do it. Some of these stocks I looked at, price action is, we can even call price action non-existent. It's just like little specks on the chart kind of connect the dots. We want to leave that alone as well. It's not going to clear up the next day. There's a 2% chance that it's going to. So again, these are the two main ones that I'm seeing. The rest of them are, well, here's another one. Has the stock maintained its uptrend? Has it broken down? And hasn't given back more than 50%. More questions to ask yourself. What else do we have? I think that was the bulk of what we were looking at. I don't think there was much other issues other than those three. It seems like daily focus, we've gotten better about that. I know last week the main issue was overextended setups. But it looks like that's fine now. It looks like most of it is just now the fine, minute details. Like this here, backside moves, pump and dump moves, ignoring sellers. Identify supply and demand. Is my plan causing me to buy into sellers? You know, I'm seeing a lot of that as well, where I'm seeing a lot of topping tail rejections where you're trying to take entries. buying up into sellers. Apart from that, though, this looks... Levels are all spot on. I have nothing wrong to say about your level. Levels are all good. Yeah, levels are all good. It was just that. Everything else is good, though. So I'm going to send this actually in chat. If you want to save it, you can save it. If not... Let's say watch list, homework, polish, checklist. This is the bulk of it, though. So before your watch list on, well, tomorrow night, review the checklist. Again, your levels are all spot on, y'all. I don't know, maybe you... I think a lot of you might rush the process a little bit. Do you find yourself taking time, or do you try to rush the watch list a little bit too much and you might miss the details? What do you think it is before we move on? What do you think it is? Do you maybe rush a little bit? Do you maybe try and just toss some stocks on a list and try to get it pumped out? What do you think it is before we move on? You want to take your time. You really do. Because the fact is, that one little lapse of judgment, that one little missed detail, you know, that's money. That's money we're talking about. You missed that one little minute detail. Maybe you're fighting trend. Maybe there's a big seller sitting overhead. Maybe you just don't have any range. You know, that one missed detail, you go in the next day to trade it. You know, you go to trade it. That's cost. You know, that's a cost. So really take your time. Dive into it. Ask yourself these questions. And here's the thing, too. If you pull up these setups, and you're like, well, this looks okay, but it's not great, don't even plan for it. All right, don't even plan for it. You should be able to pull these setups up, and if you instantly don't see your setup and say, wow, this is the perfect setup, I know exactly how I've got to watch this, just leave it off your list. Just leave it off. And that way a lot of this can be prevented too with how you have a lot of these stocks planned for. But apart from that, all good. Any questions, let me know about this. Otherwise, we're going to move on to journaling. I think a lot of you are trading already, yeah? Let me know in chat if you're already trading. I think a lot of you are. You are? Okay. I think there's a few of you that aren't, but I know most of you probably are. Okay. Okay. How many of you journal? Yay or nay? Used to. What happened? Use the WAP journal. How do you like the WAP journal? Do you guys use that one? Fell out of habit. How's your performance been since? Use it every day. Cool. Good. Probably worse. Okay, well, let's talk about it. Use an app on your computer. That's fine. You can use whatever you want. So journaling, I don't care how you journal. You can journal however you'd like to journal. It does not matter how you choose to. You guys have access to this channel, don't you? Let me double check. Yes, you do. Okay. Bootcamp journal you have access to. So, and you can look back through here. There's a lot of examples to go back through in terms of your journals. I don't care what platform you use to journal. You can use ours in the Momentum journal, which very soon our journals will have charts. Who would have thought? It's pretty hard to get market data for stuff like that, but we should have charts for our journal pretty soon. You can go back and review your charts, just like this, where you'll have the buy and sell arrows on your charts, just like so. So that should help you quite a bit as well. But this, for reference, I'm going to walk through some of this here so you have an idea of, you know, whatever preferences you have. If you want to see the arrows on the chart whenever you go back and look, Webull can do it. It's not quite as visually appealing on Webull. It's going to place it at the bottom or top of the candle. Still works. This is Trader View. So Trader View, VUE, you can use for this. You can import your trades and you'll have the arrows on the candles. If you don't really care about the visual aspect, obviously, I think it helps to have the visual aspect. And I say that as being somebody that we have our own journal that just doesn't have the visual aspect yet. I think it is helpful. Of course, you can go back and see how you traded something if it helps you to see. If you're a visual learner and you like to go back and break things down like that, then you can definitely do that. But if you want data in terms of, what price stocks do you execute best on? What time of day do you execute best? Price per share. You talk about, and you can look at everything in our journal as well, and it'll break down everything from your win rate, your profit factor, your R value, the whole 9 yards. The big thing is numbers are very important. Well, let's checking this real quick. Pick it back up. Cool. Okay. But yeah, numbers are important in anything. And again, if trading is your business, we can't really, it's like if you own a business, I think there's a lot of y'all in here that own businesses. And the fact is, unless you know the numbers, you're just sort of flying blind. And you could be sitting here tossing money out of a window every month and not even know it. And not even know where you could be improving, right, to build up that cash flow, or right, to make your business more efficient. The same thing goes with trading too. It's no different. You have to know the numbers. Like I asked earlier, I asked somebody what their win rate was. And I can guarantee most people don't know what their win rate is. Most people just simply don't know what their win rate is, their profit factor is. They couldn't tell you. But for that, we can't tell where our weaknesses are. We can't tell where we have to improve, there's nothing to build off of. And two, you look at it from a perspective of doing less of what doesn't work and more of what does work, and at least using the journal over in the WAP. You can see exactly, like I said, you can see exactly what share price you perform best with. And if you look at that journal and you say, wow, I'm just losing money on penny stocks, but I'm making money on things that are over $1 or between $3 and $5, or, so on and so forth. It gives you an idea of, okay, whenever things are maybe underneath $1, I just need to stay away. I don't want to trade penny stocks because I just don't do well on them. Maybe that's what you got to say to yourself. But again, without journaling, without having that data, you don't know any better. Right? You don't know any better. So you have to look back at this information and sort of see, do you maybe trade poorly on stocks over 20 bucks? It tells you all of this. Right? It breaks down all of this for you so you know exactly what you're doing right, what you're doing wrong, and what you can do to improve going into the next day. That way you can slowly improve, and again, get your trading business more efficient. Right? You cut out the crap and you do more of what's making you money. I think a lot of people too would be very surprised to see what their afternoon performance looks like. I think a lot of people, and I've seen it a lot recently in the chat too in the afternoon, a lot of FOMO in the chat lately. I think a lot of people would be very surprised to see how poorly their afternoon performance looks. And again, there's going to be some outliers that might trade well in the afternoon, but a lot of that afternoon stuff is over trading, and the numbers do not lie. Right? The numbers do not lie. But so anyways, outside of all of that, again, you can use whatever platforms you want to. I'll actually put some links to some that I suggest. If you want the visual aspect, I know we don't have it yet, so I'm not going to say you have to use ours. Obviously, it's included. You can use ours. It just doesn't have the visual, executions on the candles. Here, let me show you here. I'll send the links in chat. You can either use TraderView or you can use TradesViz. I personally prefer TraderView. I have no affiliation with any of these, but nonetheless, they are good platforms. All right. Check those out, though. But again, they all work the same way. They got the same purpose. I would personally use ours unless you feel that you need the candles. But what I want you to do, and it does help to have the visualizations because you can, of course, post it here. But outside of the visuals, every day you come over to Bootcamp Journal. Hold yourself accountable. I don't want you to hold any plays back. I don't want you to just not post something because you're afraid to post it or because you feel embarrassed. That's why this is here. It's supposed to hold you accountable. What did you do well? What did you do poorly? What can you do different going into the next day? But the fact is, it has to be productive. It's got to be productive and constructive. Every day whenever I wrap up for the morning, I look through my trades and I say, what did I do right? What did I do wrong? And there's a big, big fine line here, though. It's very easy to have hindsight and say, well, I should have done this and I should have done that. That's not what you have to ask yourself. Because what matters, like if I look back this morning, let me show you here. If I look back at my trades from today and I look back at, say, what can I look back at? UCAR. And I'm like, man, I shouldn't have done this. I shouldn't have done that. I took a loss. And, because I had a loss on this morning, if you recall, in pre-market. I took it here off of VWAP this morning to see if I could get a curl up into the open. I took a loss. And I can look back all day long and say, oh, maybe I shouldn't have taken it. I shouldn't have taken it. But it's easy to have that hindsight. The bigger thing is, was it a good setup? And don't just say it wasn't a good setup because it didn't work out. Was it truly a good setup? And if it wasn't, why? Why wasn't it a good setup? Break it all down. Break down why it was not a good setup and ask yourself those questions. And if it wasn't, what can you do different going into the next day to make sure that you identify that going forward? That way you don't make the same mistake. Right? Because it's all context. Every trade has context. If I look back over here this morning, look at this, on UCAR, and I know for a fact that I missed my entry right here, I'm not going to say, well, I missed my entry, I should have taken the... That's not constructive or productive. Because what I know is I was actually trading. Let me show you. This is all constructive, right? And I look back at LNAI. I was trading at the same exact time. I took an entry right here on LNAI at 9:40 this morning. The same exact time that UCAR pulled back that entry that I wish I had. Right, so from a productive standpoint, I can't say, well, I should have caught this because I couldn't have. I was trading this. So again, try to keep yourself in the moment. What I would suggest too, if you want to, you can even record your trading session. You can go back and actually watch and see what trades you were taking. I'm not saying you've got to record yourself and your voice and everything, but I just mean the trades you're taking. You can use platforms like OBS or any type of screen recorder to record your screens. That way you can actually look back and sort of see what you were thinking in the moment. Now, obviously, like I said, you don't talk through it all. It's fine. But just to record what you're doing, I think it's helpful to go back and you can review these things and play it back. And sometimes it's much easier to see what was going on in the moment by doing that. I do that every morning. I of course, record all of my trades regardless, but I go back and I review all the trades that I took. And I say, well, here's what I did. Did I do everything right in terms of execution? If I didn't, okay, well, what can I do different? Right, but it's important to be constructive, not that hindsight shoulda, woulda, coulda, which isn't productive at all. Right? None of the, oh, I could have done this and that. No, it's more or less of what can I do better? What can I do better? There's some really good examples up through here as well. If you look back through here, you've got so many examples to build off of. Let me show you some good examples. Let me show you some good examples. What do we have some here? This, for example, here, where he's just making himself known of what issues he's sort of running into. Getting better, but I do feel like buying the dips without level 2 is going to get me burned since I'm blindly buying dips. So he knows now, okay, well, I need to place more emphasis on level 2, which, of course, we haven't talked about yet in this round. That'll be for next week. But again, it's just making himself aware of what he needs to be doing differently. Or here, he's saying he's raising his stops too fast. Maybe panicking. But now he knows going into the next day, let me slow down a little bit. Let me slow down a little bit. But you can read through all this, and again, great examples of sort of what it looks like to journal properly. It's not rocket science. It's just like your diary. You know, it's just your diary. You know, I can only tell you so much how to journal, but the big thing is just make sure it's productive and constructive. And I'll be reviewing some of these going into the next week too once you do start posting these. But start doing it every day. Even if, here's the thing, even if I don't review it, which we are going to next week, but even on days where we don't, just post it. Just post it. I promise, if you just make yourself post it, just force yourself to. Say, look, I don't care if he's going to read it or not. I'm going to post it for myself because I know that if I post this, I'm going to hold myself more accountable and I'm going to be much less likely to make bad decisions. You're not going to want to go chase something, full port something, oversize on something, ignore a stop loss on something if you know for a fact you've got to post that trade and talk about it. So just make it a habit. Force yourself to. You don't want to get up in front of the class or post it here, just metaphorically in front of the class. Right? So you're going to make better decisions. I promise you're going to make better decisions. Same goes for the watch list too. If you know that you've got to post that watch list, you build that routine and you force yourself to do it. But that's the one thing you can't do is over time. Now I'll say I don't sit here and type out a journal every day. I don't type out a diary, you know, this far along. I don't still do that. But once a week, at the end of the week, I do go back through and review everything that I've done for the week, and I review where I have some areas for improvement going into the next week. But where you guys are at the moment, a lot of you are, I would say to definitely make it a habit right now. This is part of your daily routine. It should not take you really any more than 10, 15 minutes. You know, you pull up your trades, you know, your 3, 4, 5 trades you had, or however many trades you've got. And just go back and review. Just go back and review and see what you did well. Use OBS too. Yeah, OBS is good. OBS is good. And yeah, you can even go back. I forgot about that. You can actually go back to the stream recordings too and watch my trades back as well. That way you can go back and study my trades from the live stream. But you can do the same thing for yourself, right? You can go back and watch your own trades. That way you can see again where you have room for improvement. But again, the numbers are important. The numbers are very important. They might scare you. You might not want to see the numbers. But those are the numbers that you've got to face. Those are numbers you've got to look at. And again, that sort of gives you some direction of where to go next. What to do more or less of. Where you can size larger or smaller on. Right? This is why I size smaller if we're trading stocks that are over 10 bucks, 15 bucks, because I don't trade them quite as well. My happy stock range is like $1 to, $5. That's where I find the most success. So I know whenever my setup comes along between $1 and $5, I've got to execute and I've got to take more size. Right? Because I know that's where I make the most money. So again, you have to figure out where that return is coming from. But without the numbers, you're just, like I said, you're flying blind. You're just flying blind. So going into the rest of the boot camp, I want to see you post in boot camp journal every day. I want to see you posting every day. Of course, the watch list too. This is your new routine. Watch list, journal. Journal after you're done trading. Watch list in the evenings. That's your new routine. Combined, you might be looking at an hour. Combined. So total time investment to trade properly, you're looking at what? 2, 3 hours a day? If that, depending on the morning. Some mornings obviously wrap up in about an hour and a half. The mornings, you might be looking at, 2 to 3 hours a day. Now, of course, that includes making a watch list. That includes journaling. And you can probably cut that down a little bit as time goes on. Of course, you trim it down. A watch list might take you 30 minutes. Journaling might take, 10, 15. You're cutting it down to about 2 hours, 2.5 hours total. But nonetheless, what I would suggest doing for now, for sure. If you can't find the time for whatever reason to journal every day, at least do it into the week, at least. When you have a chance, I'm sure you can find time. At the very least, you know what you can do too? Is if you go to the journal, I'm actually going to show you over in I'll do a little manual log and show you sort of how it might look. So check this out. Okay, check this out. So the journal's pretty dang awesome. Over in here, you can of course import your CSV, manual log, whatever. But what you can actually do is if you go down to your calendar, you can take notes. Take notes, look back at your trade and say, oh, I should have done, I chased and wasn't aware of seller's overhead, bought up into pre-market supply, be more aware of key areas to prevent fake outs in the future. And it will save this. You can go back to it. Look at this. And it saves all of this here. It saves all this. You can go through here and, of course, take notes on every day you got. See the trades you took. So on and so forth. Of course, you have all your numbers here as well. You can go down and look at your win rate, your R multiple, expectancy. This is how much you're expected to make in every trade you take. If this is in the red, of course, that would mean that you are unprofitable. The average trade you take results in a loss. And of course, so on and so forth. You look back here at P&L by price, hourly performance. This is very, very telling for most people. They trade the afternoon, wasting their time. They look back at this and say, wow, I better stop. And of course, win rate by price and everything else. But use the journal. Use the journal. At the very least, just import your trades into that. Use the journal. Use it, use it, use it. All right. Any questions about journaling? I don't want to waste any more time on that because there's not a whole lot more to be said. Let me know. Any questions at all about journaling before I move forward? For the most part, just don't overcomplicate it. Just use it as a diary. That's it. As long as you do it. All good? Okay. And make sure you do it. Don't stop. Don't break the habit. Even once you become profitable, don't stop. Keep doing it. Don't fall back into old habits. All right. Well, let's talk about some new stuff here a little bit. I want to look back at, I think one of the bigger problems we had too is, of course, these big draws of liquidity where we might be ignoring a little bit. And I want to look back at some examples on stuff like, what do we have on UCAR? UCAR, W&W, stuff like that. I want to look back at. Sort of give you a better idea of what I'm talking about. We will actually look back at W&W might be a better example. Yeah, this is a much better example. So what I want to talk about a little bit is sort of, we have these areas of manipulation as sort of what we'll call it here, these large topping tails, these large wicks. Whenever price, for example, tries to break over a high here, big topping tail rejection, this manipulation where it manipulates over the high, right, which typically whenever we have a big topping tail like this over a high on attempted breakout, typically leads to a reversal. Yeah, 9 times out of 10. Right, majority of the time, if something fakes out on a breakout, it's typically leading to reversal. And so we had a lot of that in W&W. We had a lot of that in W&W. How do you trade it? Can you trade it? Well, that's debatable. That's definitely debatable. I could say that you possibly could, although it's definitely not all that clean. But when it comes to marking these things up, and again, we can sort of use these areas of liquidity. This is all liquidity sitting through here where it tries to break over a high, manipulates, and then it, of course, sells off. Right, this is manipulation. And so these areas of liquidity we can mark up just like this, just like we do with our zones, our supply and demand, because this is an area of supply. Right, this being the origin where this area of liquidity is coming from, this area of supply where it pops up into a new high and begins to sell back off. All right, that is an area of liquidity. That's supply. Same thing goes here where it tries to pop to a new high, again, rejects off the high, forms, again, more liquidity up here through these highs. And so, again, same story. Same story, same story, same story. Again, it just goes on and on and on. We can keep on doing this, keep on doing this, keep on doing this. Again, right here, where it, check this out, breaks the new high, rejects. Okay, cool. That's also an area of liquidity. Look at this. Breaks this high. Instant rejection. Okay, cool. Another area of supply. And you'll actually see how these levels are all respected as well. It's pretty dang interesting. But where liquidity sits in the market, right, this manipulation, where liquidity sits in the market loves to find its way back. The market loves to find its way back because it knows there's liquidity sitting through that range. And I know you hear this probably with futures and Forex and all that all the time, and you're like, well, you know, does that really apply to stocks too? And it does. It does. Market structure is market structure. The way stocks move, the way markets move, they all move the same way. They all move the same way. We just don't use the TikTok terms like fair value gaps and order blocks and all the other cringy course seller whatever terminology. So anyways, you have areas of liquidity sitting through here. And again, it all acts the same as price loves to find its way back. Price loves to grab liquidity. Right? Because the market's always looking for what? The market's always looking for liquidity. Liquidity moves the markets. And so typically most of my most profitable entries come from areas of liquidity. We have to look for confirmation out of areas of liquidity. And so I'll actually show you back, I believe it was this morning on CREG on Craig. Let me show you back here. The entry this morning, and even on, was it BNAI too? BNAI, I believe it was as well. Not BNAI, what was it this morning? BIAF. We had a few examples. I'll have to go back and look and see where those examples were. Even this is a great example here, but what was it this morning too? LNAI. This is what it was here. Exactly. So if we look back here, I'm going to show you here. And again, my first entry here this morning. And this thing was fairly clean too. For one, again, I want us to really visualize this a whole lot more because I saw a lot of this on the watch list that needed some work in terms of where we have buyers, where we have sellers. A lot of stuff where you're looking for breakouts up into sellers, for example. And now I want to talk about this too because look at this. Over here in LNAI, where a lot of people would look at this and say that, okay, we have these lower highs, we've got these higher lows, I want to see a breakout over 68 cents. Well, do you really? Because here's the problem. What do we have here? Big topping tail off the highs. And again, let's talk about it. Okay, this is supply. I know we have sellers sitting all through here. So if I was to take a break of trend, right, a break out of this tightening wedge, what am I buying up into? I'm buying up straight into these past sellers. Right, this is an area of liquidity. You don't want to be that. You don't want to be liquidity. Ask yourself, am I liquidity or somebody else? Well, if you're buying up into these previous highs, you are not. You are not the one using somebody else as your liquidity. You are the liquidity. Right, you're not going to be having a great time. Not going to be having a great time. But again, we can identify this because look, it tries to, look at this, it tries to curl here, rejects, gets shot down. Massive topping tail off this high, rejected off this high, so why am I taking it here? This is why candle patterns don't work. You look at this and say, oh, we have a big tightening wedge, I want to take a breakout. No. Because look at what happens back here. Price action clearly says, hey, stay away. Stay far away. There's nothing but sellers all up through the 70 to 74 cent area. It's that simple. Just look at past price action. It tells you everything you've got to know. Same story goes down here. My entry this morning, I'll show you. We had 2 entries on this morning on LNAI. Entry number 1 was here off the pullbacks. Entry number 2 was right here off the pullbacks. Now entry number 1, well, actually, both these are fairly simple entries, which they're the best entries. The simplest entries, the ones that are most obvious, tend to work out the best. I want to show you this. Look at this. This is so cool. Back in pre-market. Check this out. Let me get my other screen pulled over here. So back in pre-market. What do we have here? Help me out here. What is this here from pre-market? Topping tails. Okay, which creates... What is created from that? What is created? Double tops, but again, what does it create? Right? What does it create? Liquidity, 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 right? We're looking for liquidity, supply, liquidity. That's what I want to see is supply, liquidity. Okay, so I know through here we've got sellers. I've got sellers. Okay, now what do I do with that information? Well, we're going to visualize that. I know I've got sellers sitting through that price range. Okay, cool. Cool, cool, cool. Now what? Okay, let's look over here at market open. All right, cool. All right. Ah, okay, now I see what's going on here. Okay, so if I know that sellers were here, I mean, this is the exact entry I took this morning on stream. Both here. Before I even say, do we know what I did? Do we know what I did? Do we see the entry already? Before I even talk about it? Look at this. Look, look, look. Look how clean this is. Supply became demand. There you go. So price broke above in a strong way. That's key. Again, I don't just want to see a little tiny test above. I want to see a strong break above. Right? Breaks above in a strong way. Pulls back. What else did we have? So yes, I've got this area of supply that became an area of demand because, of course, price broke above, pulled back. Okay, cool. What else do I have? Okay, I have the 90 MA. Okay, so I've got the 90 MA. I've got this pivot out of this past area of supply. Pre-market highs right there is support. Okay. So I've got a lot working for me. Needless to say, I've got a whole lot working for me. Right, I've got a whole lot working for me. And I clearly want to see price maintain off the 9 EMA. It has so far this morning out of the open. So it pulls back. I see a buyer come in off the 9. I see a buyer step in. That's my entry, risking off the 9 EMA for the leg back wear to previous high of day. Right? From a sheer risk to reward standpoint, let's just grab our little entry tool here. 65-cent entry, risking 62.50. 3.5 to 1 risk to reward up into that previous high of day. Sure, that's an awesome setup. Perfect confluence, perfect setup. And then I guess what? I know for a fact here after this first entry, where a big buyer steps in, takes back up into the high of day. I know now what? What do I now know? Buyer stepped in. Okay, cool. So now I know for a fact that buyers are interested in it through here. Okay. And I know that I've got these lower highs. Lower high, lower high, lower high. Okay, cool. So we can go ahead and mark this up as well. Okay, so price pulls back, rejects off the high, dips down off the 20 EMA, and puts in place this doji. Okay, well, it flushes down, puts in place this indecisive candle off of this area that buyers had just shown demand. So again, do I have proper risk to reward? Well, what we've got to know to help us identify whether or not we actually have proper risk to reward, one of the biggest things that even myself I struggle with sometimes whenever I'm taking these pullback entries, we've got to look overhead and make sure we have enough room to whatever this trend line resistance is overhead, because in some of these tightening wedge setups, you just simply don't have enough range. In this case, we did, though. If you look here, I'll show you again visually. We had an entry here at 65 cents. Stops go down here at bottom of the range, 62.50. We had range back up here to, what, 70 cents again on top of the range. So you had about 2 to 1 risk to reward. That generally is the minimum. If I don't have at least 2 to 1 risk to reward in the setup, I'm not going to take the trade. There's not enough incentive. Right, there's not enough incentive. So let's just say the range was much tighter. Let's say that I'm looking at, let me get rid of this and I'll show you what it might look like instead. Let's say we're looking like this instead. Am I still going to take this here? No, I don't have enough range. There's no way. What is that tool? The tool is right. Check this out. Long position tool. And you can actually go on here and you can say, okay, I'm taking an entry here. My stops are going to be here. My range is here. Okay, do I have proper risk to reward? Yes, I've got 3.6 to 1, just as an example. I want to have 2 to 1 risk to reward, at least. At least. If I don't, then of course it's just not a good setup. It's just, let's leave it alone. Now in the moment, of course, you can't take that tool out and have time to use it. I'm just showing you here as a visual. Sometimes it might be a little bit too quick. But now you know, if you have time to use it, it's definitely pretty helpful. Definitely pretty helpful. But that's one of the biggest issues. Check this out. I'll show you here what I mean. Over here, you might be saying, well, why did I like it here? Why did I like it here, but not here? Do you know what the answer is? What do you think? What tool was that? It's called long position tool. You'll see it up here. But why do I like it here and here, but not here? What red flags did you have? Did you know? What you think? It was going down. It was going down here too, though. Broke trend, but rejected. Yeah, let's check this out. So like I just said, we have ascending resistance here. And we also have, of course, okay, so we look at this. Well, we have range. Okay, so then what was the issue? Well, the problem was, I want you to look at this here. We have sort of a trend within a trend in a way. You can sort of look at it this way. You sort of have this trend within a trend where price is just, for one, it's trending downward. There's nothing here telling me that this is a proper entry for one. Again, I have this sort of, again, we have these lower highs, lower highs, lower highs. So for one, yeah, not ideal. Not ideal. Like you said, volume was decreasing, sure. It was. Which isn't a bad thing at all. Because here's the thing. When we have consolidation after a massive move to the upside, typically we want to see lesser volume. Typically I want to see lesser volume on pullbacks, and that's fine. But in this case here, like I said, we put in place these lower highs, which defeats the entire setup. And for one, too, of course, the 9 EMA crossing beneath the 20 EMA, price breaking below the 9 EMA. So, yeah, exactly. The big thing here for me, the big red flag, would have been the break below that 20 EMA. But at the same time, why did I not like it here then? What's wrong with this here? Well, again, it's stuck in a range, right? It's stuck in a range. So the real answer here is it's just stuck in a range. There was no reason to play this, right? From here, we had so much room, right? This thing is making, what, swings from 62 to 70, 62 to 70. I've got range to mess with here. Through here, it's just stuck in a range. I've got no clear direction. So the only way to have played this, from this point on, it would have had to have been the breakout higher over this 74-cent area. I couldn't have played it any other way. There's no chance. Absolutely no chance. Let's look back at AIRS from yesterday. I think it was a very similar setup. I could be completely mistaken, but I believe it was. Yeah, this is a pretty good setup from yesterday, actually. So check this out. Same thing applies here. Really good example. Really, really, really good example. My entry here yesterday, if you recall, was right here on the reclaim of the 9 and 20 EMA. And so the same exact thing happens here too. Check this out. So for one, market structure. What do we have here? Higher high, higher high. Okay, cool. So I have ascending resistance overhead. Going into the open, I've got higher low, higher low. So what I know here is, look at this. Price pulls back after this impulsive move to the upside and then begins to leg up higher, right? So we have this first leg, pulls back, legs higher. Okay, this is an area of demand. Cool. All right, so let's mark this up like so. Bada bing, just like that. All right. So now check this out. Now, I knew this being an area of demand. This being, of course, we have higher high, which gave us what? It gave us what out of the open? Gave us range. Gave us range. Yep, gave us range. Exactly, gave us range. And we also had defined risk down here where we had demand formed from pre-market. So when price pulls back, of course, I'm not going to go chasing a falling knife down here up into this area of demand. I played it a little bit higher because we still had proper risk to reward. So I actually waited for price to get bought up out of the open. Waited for this first candle to close. And nailed my entry right here at 293. Let's bring out our handy dandy tool. Entry 293. Where does my stop loss go? Can you tell me? Higher high, okay. And I know I had range to ascending resistance, so I had a 3-to-1 risk to reward here as well. Just like that. 293 stops off the bottom of this candle. Do we know why I'm using the bottom of this candle, not just the bottom of the zone? I see some saying top of zone, bottom of zone. In this case here, I would have just risked the bottom of this candle. Just would have risked bottom of the candle. That's where buyer stepped in out of the open. That is the higher low. I just want to see that low hold. That's it. I just want to see that low hold. Yeah, the bottom of the zone, it's just, at this point, if it was to break beneath this low, it's long gone. Don't wait for it to come all the way down here. Don't wait for it to come all the way down there. As soon as it invalidates, it's invalidating beneath this low. Probably sooner, but, that's what you'd be risking off of. Exactly. So again, 3-to-1 risk to reward. Again, we had ascending resistance overhead, providing range. And of course, we had this clear area of defined demand down here to use as your risk and entry. And again, for confluence, we had, check this out, the 9 EMA crossed back above the 20 EMA on the break back above. Price right there above the 50 EMA and VWAP. So again, you have all of this confluence as well. We have, again, what I want you to realize with these entries, though, my most profitable entries are all rooted off of the one thing. We have liquidity acting as confluence. We are not liquidity. Somebody else is. Somebody else was liquidity right here on these pullbacks. I was not. Somebody else was liquidity buying up into these highs. I sure was not. Because I'm using that liquidity to my advantage to find these entries. Just like here in AIRS. Just like over here on LNAI, right? I am using somebody else's liquidity to my advantage to find these entries. Right? Where somebody's panic selling and getting out of this on the break of the low of this candle, that was my entry opportunity. As somebody's panic selling here, getting out, break of the candle, break the 9 EMA, that was my entry. Again, using this area of liquidity from pre-market as my confluence, right, to take this entry. But the example over here on AIRS is such a good, clean, clear example of what one of these opening trades looks like. Nice setup. Yeah, for sure. For sure, but these two are perfect examples of what I mean by identifying where we have buyers, where we have sellers, and it can help you identify setups just like this. Everything else, of course, is just confluence. It's just, it's the cherry on top. Ultimately, though, it moves the market. It's zones like this, right? This grab of liquidity at market open where price confirms out of this past area of demand from earlier on in pre-market before the bell. That's what's key. Obviously, I want alignment with the 9 EMA, the 20 EMA, VWAP, the 50, and so on and so forth. But ultimately, the most important thing is, again, market structure and price action. It traded well. It did trade well. I agree. It did trade very well. It was very clean. It was very clean. I was even able to get an ad. I got an ad here, if you recall, too. It was pretty clean. I agree. But again, it's not a China, so it's like, that's what you're fighting this week so far. Whenever we don't have a China, it's pretty clear cut, pretty simple. Do we have any questions about, I know that was sort of brief, but we've already talked about it quite a bit, but just from a watch list perspective, from a planning your trades perspective, do we have a good idea of buyers, sellers, where they sit in the market, again, identifying them through supply and demand on a scale of 1 to 10? Does that make sense? I know it's probably rocket science, or at least sounds like alien language, but I promise, whenever you're trading, just look at the charts in a way where you're just constantly asking yourself, where are buyers, where are sellers? Don't try and overcomplicate it. Just view it as such. View it as where are they throughout the market based on the size of the moves, the volume you're seeing at these different prices. What we're also going to do going into Thursday, we may start going into level 2 and diamond sales as well. So that will also help with a little bit more confluence, and this will make more sense as well. Scanners will be next week, yeah. How do you find range on IPOs like SWMR? You would use psychological levels, whole numbers. When you say it trades wide, do you mean the consolidation takes too long to break out? When I say something trades wide, it's almost like W&W yesterday. Like, it just trades really, really wide. Like, essentially what it means is if you don't have wide stops, you're going to get stopped out. You're going to get your stop sniped, and then it's going to make the move. Pretty much is what I mean by that. You've got to keep it so wide. Look at this. I mean, these are like 60, 70 cent moves, right? This here, $4 drew all the way down to 313, then it legs higher, right? It just trades so wide. What was my exit on AIRS are you referring to for exit? My exit on AIRS was up into these highs. I believe it was at 320. If you were on stream, maybe I was wrong, but I think it was 320. I believe it was right up here on 320. Yep, I believe it was 320. Minimum per volume, not really. No, every stock's different. Different stocks require different amounts of volume to trade clean. The bigger thing is the spreads, which we'll dive into spreads whenever we talk about level 2 on Thursdays. So we'll dive into that on Thursday on level 2, talk about the spreads. You could have a stock like, I don't really have an example off the top of my head, but a stock could have an immense amount of volume and still trade terribly. It just all depends on the stock. It's very situational. How do you collapse your y-axis so fast? I've got to click and drag about 5 times. I'll be honest, I'm just like spamming. I mean, I'm using my scroll and I'm also using the side of the screen here rather quickly. I agree it can be a little bit annoying, but it's just maneuvering. You can also just hit auto at the bottom right and it will speed that up a little bit too. Sometimes it works, sometimes it doesn't. On HGWB, you saw volume over the highs. Let's go back and look at it. Where were you looking on the daily with your volume profile or somebody else or somewhere else? I'm assuming daily. Where were you looking at? Intraday. Were you watching it over the highs or somewhere else? I'm assuming you're watching it over the highs, or are you watching it down here? It's going to show, doggone it, it's going to show today's volume too, which is going to throw it off a little bit, so it's not going to be accurate on my screen. But yeah, no, so the big thing with that, if you've got volume profile where I'm assuming you saw a lot of volume sitting through here, correct? So in a case like that, I just would avoid taking breakouts. It's not that you can't play it. I would have to take pullbacks into this range. I could not take anything else. I could not take anything else. Anything through here. Again, I agree you're sort of fighting fire or playing with fire. I agree. But I think playing it bottom of the range, I think is doable. Where I wanted to play it, yeah. I think that's fine. I think that's fine. Of course, I wouldn't, like I said, I wouldn't try to play it through here. I wouldn't be taking entries through here. So no breakouts, nothing up here higher. But to sort of try and use this past area of liquidity, you can see here we have supply here. We have demand confirmed through here. You know, if we had broken out a little bit cleaner today with more volume, I think that would have been a great opportunity. But just didn't have the volume behind it today, sadly. But yeah, just focus on this back here. You have this sort of range formed. Yes, like I said, avoid this. You've got a lot of ranginess through here I wouldn't play in, a lot of volume. But apart from that, any other questions, let me know. Otherwise, we'll wrap. And I'm hoping tomorrow we don't have another Chinese stock. I'm crossing my fingers. I'm tired of them. I'm green this week, but no conviction. So we'll see what we get. All right, y'all. Well, I'll see you back Thursday. Again, we're going to be diving into a new lesson on Thursday. Get your journals posted. Again, don't worry about being right or wrong. I just want to see them posted. There's no real right or wrong. Just post it up. Hold yourself accountable. We'll meet back on Thursday about level 2. Dive into some time and sales thereafter. Should be a fun class on Thursday, though. I will see you back then. Hopefully a good day tomorrow. Stick to those rules, and I will see you then. See you guys.